Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. This week, instead of being in the CBT News studio, I'm broadcasting from a hotel room in Las Vegas. I'm out at the conference for Auto Remarketing, and it's actually kind of nice to be back at a physical conference. So let's get started. Wall Street's record-breaking run for stock market flotations shows no sign of slowing down. With more than 6 months until the year ends, US IPOs have already totaled $171 billion, eclipsing the 2020 record of $168 billion. Driving the IPO rush are sky-high corporate valuations in the stock market, inflated by the Federal Reserve's low interest rates and monetary stimulus in the wake of the COVID-19 pandemic. This has fueled a wave of speculative frenzy that benefits not just traditional companies going public, but also special purpose acquisition companies or SPACs formed strictly to raise money through IPOs. The IPO gold rush is set to reach new heights in the second half of 2021 as a number of high-profile startups, such as China's largest ride-sharing company, Didi, online brokerage Robinhood, and electric vehicle maker Rivian, prepare to launch multi-billion-dollar share sales. All of this is supporting a very healthy M&A investment environment for the auto tech landscape. So with that, let's jump right into the technology deals of the past week. First up, Waymo added $2.5 billion more in funding. The new round comes a little more than a year after the company raised $3 billion in its first external funding round. Much has changed in the interim. Waymo expanded testing of robo-taxis without human backup drivers just last October. It saw CEO John Krafcik depart in April. This month, the company added another key partner, logistics firm J.B. Hunt, as the industry gravitates towards trucking as its first application of commercial autonomy. Waymo did not disclose the valuation of the company, but investment firm Morgan Stanley estimated its value at $105 billion as of September last year. The same companies that participated in Waymo's first funding round have participated in this latest one. They are AutoNation and global parts supplier Magna International, as well as Waymo parent company Alphabet, the Canadian Pension Plan Investment Board, Mubadala Investment Company, Fidelity Management and Research, Perry Creek Capital, T. Rowe Price and Associates, and global tech investment firm Silver Lake, which led the first round. The lone newcomer to this new round is Tiger Global Management. In the vehicle insurance space, USAA is acquiring Noblr Car Insurance and will use the company's usage-based insurance platform for a new offering. Terms of the transaction were not disclosed. USAA drew a distinction between its current telematics-powered program called SafePilot and its plans for the Noblr technology. SafePilot will be operated as a behavior-based insurance product using primarily data about driving habits. The Noblr-powered program will primarily use data about trip frequency or more usage-based. SafePilot is currently available in 4 states and collects data via mobile app. USAA says that as many as half of its new signups in those states opt into the program. Frequency of use is part of its algorithm, along with harsh braking and distracted driving. But with driving habits for some permanently changed by the pandemic, USAA sees increased value in usage-based pricing in addition to behavioral data. Chip maker Nvidia is acquiring DeepMap Inc., the high-definition mapping startup. The company said its mapping IP will help Nvidia's autonomous vehicle technology called Nvidia Drive. One of the biggest challenges to achieving full autonomy in a passenger vehicle is achieving proper localization and updated mapping information that reflects current road conditions. By integrating DeepMap's tech, NVIDIA's autonomous stack should have greater precision, giving the vehicle enhanced abilities to locate itself on the road. DeepMap, founded by former employees of Google, Apple, and Baidu, can use NVIDIA Drive's software-defined platform to scale its maps across autonomous vehicle fleets quickly and without using too much data storage via over-the-air updates. NVIDIA will also invest into new capabilities for DeepMap as part of the partnership. NVIDIA is expected to finalize the acquisition in Q3 2021. The rush to back LiDAR companies continues as more automakers and robotaxi startups include the remote sensing method in their vehicles. Latest to the investment boom is Hassai Technology, a Shanghai-based LiDAR maker founded in 2014 with an office in Palo Alto. The company just raised over $300 million in a Series D funding round led by GL Ventures, the venture capital arm of storied private equity firm Hillhouse Capital, smartphone maker Xiaomi Technology, on-demand services giant Meituan, and CPE, which is the private equity platform of CITIC Capital. The proceeds of the round will be spent on mass producing its hybrid solid-state LiDAR for its OEM customers, the construction of its smart manufacturing center, and research and development on automotive-grade LiDAR chips. The company said it has accumulated several $100 million in funding to date. LiDAR is not limited to powering robotaxis and passenger EVs, and that's why Hassai got Xiaomi and Meituan on board. Xiaomi makes hundreds of different connected devices through its manufacturing suppliers that could easily benefit from industrial automation, to which sensing technology is critical. But the phone maker also unveiled plans this year to make electric cars. Meituan, delivering food to hundreds of millions of consumers in China, could similarly benefit from replacing human riders with LiDAR-enabled unmanned vehicles and drones. Hassai, with a staff of over 500 employees, says its clients span 70 cities across 23 countries. The company touts Nuro, Bosch, Lyft, Navia, and Chinese robotaxi operators Baidu, WeRide, and AutoX among its customers. Electric Era, a Seattle startup that is designing and bundling battery systems for electric vehicle charging stations, has raised a $3 million seed round led by Remus Capital. The first hurdle to EV adoption was range anxiety regarding how far a vehicle could run before recharging. And now the challenge has shifted to where and how quickly drivers can recharge. Electric Era has created an energy storage device using lithium battery cells that pairs with fast charging stations being built around the country. The storage is needed to buffer the draw on the electrical grid caused by lots of cars plugging in for the rapid charges. Utility operators can slap charging stations with large fees when the demand for power spikes, so a battery system like Electric Era's can provide energy off the grid, avoiding those charges. Electric Era is going through certification, safety, and qualification testing for its products. The company expects to deploy its first units to customers in coming months. The startup recently moved to a new larger space in Seattle. The team will be able to build 40 energy storage units a week. Motorway is a UK startup that allows car dealers to bid in an auction for privately owned cars for sale. The startup has had rapid success by removing a lot of friction in the process. It's now raised $67.7 million in a Series B round led by Index Ventures, along with new investors BMW I Ventures and Unbound. Existing investors Latitude and Marchmont Ventures also participated. The funding will be used to extend its platform and grow the current 160-person team. Motorway claims it allows customers to sell their car for up to 1,000 British pounds more than they could via other means by uploading its details via a smartphone app that also using computer vision to assess the state of the car. Over 3,000 professional car dealers then bid for the vehicle in a daily online auction. The highest offer wins the car, which is then collected for free by the winning dealer within 24 hours. Motorway says it has sold 65,000 cars since its launch in 2017 and seen sales hit 50 million British pounds in May 2021 alone, 2.5 million British pounds worth of transactions a day, and more than 4,000 completed car sales a month. With only 5% of all vehicles in the UK sold online right now, there's plenty of headroom for this market to grow. Many people in emerging markets depend on informal public transport to move across cities. But while there are ride-hailing and bus-hailing applications in some of these cities, there's a big need for journey planning apps to improve mobility for users and reduce the time they spend commuting. South African founded startup Where Is My Transport is one such company filling that gap. It has announced a $14.5 million Series A extension to continue its expansion across emerging markets. The company already has a presence in South Africa and Mexico. Naspers, via its investment arm, Naspers Foundry, co-led the investment with Cathay Africa Invest Innovation Fund. According to Naspers, the size of its check was $3 million. Japan's SBI investment also participated in the round. The extension round is coming a year after Where Is My Transport received a $7.5 million Series A investment from VC firms and strategic investment from Google, Nedbank, and Toyota Tsusho Corporation. Where Is My Transport maps informal and formal public transport networks. The company then uses the data to improve the public transport experience, making commuting safe and accessible. In addition, Where Is My Transport licenses some of this data to governments, operators, and third-party developers for research, analytics, insights, and consumer and enterprise solution purposes. Caro, one of the largest automotive marketplaces in Southeast Asia, announced it has hit unicorn valuation after raising a $360 million Series C round led by SoftBank Vision Fund 2. Other participants include insurance giant MSIG Asia and Indonesian-based fund EV Growth. About 90% of vehicles sold through Caro are secondhand, and it offers services that cover the entire life cycle of a car, from maintenance to end of life when the vehicle is broken down and recycled for parts. Founded in 2015, Caro started as an online marketplace for cars before expanding into additional verticals. The company's operations are divided into 3 areas: wholesale, retail, and fintech. Its wholesale business works with car dealers who want to purchase inventory, while its retail side sells to consumers. Its fintech operation offers products for both, including B2C car loans, auto insurance, and B2B working capital loans. Caro's last funding announcement was in August 2019, when it extended its Series B to $90 million. The company's latest funding will be used to fund acquisitions, expand its financial services portfolio, and develop its AI capabilities, which Caro uses to showcase cars online, develop pricing models, and determine how much to charge insurance policy holders. It also plans to expand retail services in its main markets, which are Indonesia, Thailand, Malaysia, and Singapore. Caro currently employs about 1,000 people across the 4 countries and claims its revenues grew more than 2.5 times during the financial year ending March 2021. China's Full Truck Alliance is aiming for a valuation of over $20 billion in its US IPO, marking another high-profile Chinese stock market listing in New York this year. Full Truck Alliance, which calls itself the Uber for trucks and is more popularly referred to as Manbang in China, said it is offering 82.5 million American depository units at between $17 and $19 per unit. Each unit represents 20 Class A ordinary shares. At the top end of the price range, FTA could raise as much as $1.57 billion from the IPO, which would make it the largest US listing for a Chinese company this year. India's multi-brand car workshop and spare parts platform, GoMechanic, raised $35 million in its Series C round, led by Tiger Global Management. Tiger Global spearheaded the financing with a $26.3 million commitment. Existing investors Sequoia Capital, Oreos Ventures Partners, and Shirate Ventures, which was formerly IDG Ventures India, have invested as well. The fresh round takes the total investment in GoMechanic to $55 million to date. Previously, it had raised $20 million across 2 institutional rounds. GoMechanic has been valued in the range of $350 million to $320 million post-investment. The 5-year-old company claims to have over 500 service partners on its platform and has serviced over 2 million cars. Brazilian intercity bus startup Busser Brazil has raised 700 million reais, or 138 million US dollars, from LGT Capital Partners, Lightrock, SoftBank, Monashees, and other venture capital firms to fund new services aimed at a 10-fold expansion next year. The travel app, which now serves nearly 4 million users in Brazil, aims to modernize ground transport, where some 300 million bus tickets were sold in 2019, according to Valor Capital Group, which also contributed to the round. Buster said the fresh capital would help finance 1 billion reais of investment over the next 2 years, including expansion into cargo shipping, urban transportation, and a marketplace for traditional bus companies. The startup said it is earmarked 200 million reais to finance new buses for its partners and 400 million reais for opening new destinations across the country. So let's now transition to our companies to watch. Every week we highlight interesting companies in the automotive tech space to keep an eye on. If you read my monthly industry intel report, I showcase a few companies each month, and we take the opportunity here on the Friday Five to share some of those companies each week with you. Today, our companies to watch are WideWhale and KERAS.ai. First up, we have WideWhale, which was founded in 2017 and is located in Burlington, Vermont. WideWhale helps businesses of all shapes and sizes manage their online reputation. Through its full suite of powerful review management products and services, WideWhale helps thousands of businesses engage with their customers, increase online visibility, and grow their business. WideWhale focuses on review generation, review management, and social media management that work together to deliver a seamless experience. When combined, WideWhale's products and services are your behind-the-scenes online reputation management engine that grows your business. If you're looking to build loyalty, create community, and harness the power of your happy customers through online engagement, WideWhale is an innovative company that is worth looking into. Our second company to watch this week is KERAS, founded in 2020 and located in Boise, Idaho. KERAS is a credit intelligence platform that powers real-time decisions. Using data aggregation and mining, signal processing, and machine learning, the KERAS platform delivers cash flow inputs to investors, lenders, and originators. Starting with the $1.36 trillion auto debt market, KERAS's technology provides predictive insights for both private loan pools and securitizations. KERAS provides solutions to institutional investors, lenders, and originators across the entire ecosystem and enables them rapidly source, vet, cleanse, and analyze millions of rows of data, understand borrower and lender behavior, and gain access to additional sources of capital. The KERAS portal, which delivers their analytics and visualizations, is designed to seamlessly integrate with credit investors' daily workflows and supplement existing investment diligence platforms. Every data point and table available in their web application is also available via their API suite. This allows developers and sophisticated investors to integrate KERAS insight and data directly into existing work streams and reporting tools. KERAS is a company to watch in the credit intelligence area of the auto tech ecosystem. So that's your weekly Friday Five with a quick wrap up of the big deals in automotive technology over the past week. If you're an early stage automotive tech entrepreneur looking to raise money, or an entrepreneur who's trying to decide whether and when they should raise money or sell their business, I'd love to speak with you. Thank you for tuning in to CBT News for this week's Friday Five, and we'll see you next week.
Thanks for joining us for another edition of the Friday Five.